Uh, Listen, it's not about kissing it. It's about absolute truth. That boy deserves a raise. So you gonna make that happen?
You just hit me cold with that. I just don't know what. I'm speechless.
Well, hey, at least for dinner tonight,
Yeah, John, if you
you
get
know.
dessert tonight.
Yeah,
All
exactly,
right,
exactly.
let's get started, Chuck, because it's 11 o'clock,
Right.
11:05. I hope everybody's had a great week last week. That sounds like they did here in the class. But the other thing I want to remind people is that we do have an event that's going to occur sometime, maybe after 10 o'clock tonight. And one of the things I want to talk about once we get there is how to hedge your portfolio if you got open positions. I have open positions. There's a possible event tonight. And so what we're going to do is, generally speaking, most sell-offs have been contained inside 5%.
So,
And
Tom, let's go ahead and go through the steps to get there. We got a little bit of an intro to do. If you can wait 30 seconds, all right?
okay,
So,
Chuck.
all right. So, welcome to Train and Trade. We're live every trading day at 11 a.m. Sometimes we're a little bit more live than others. Join Tom's free YouTube channel, dtitrader.com/YouTube. Click like and subscribe when you get there. Where we look forward to seeing you guys there. The live trading tab, once you go to that page, will be the first thing you see. Just go ahead and click in, like, subscribe, say hello in the chat. We'll have a nice little discussion over there. Now, we are going to talk about markets. There is a very high degree of risk involved in trading. You and you alone will be responsible for all the decisions you make. Make them wisely. Always consider risk when trading, and remember that past performance is not necessarily indicative of future results. Crude opened this week at 88.15 after closing last week at 82.59. So, for those of you wondering what happened with the market over this weekend, well, the answer is probably somewhere in that crude market. Most likely has something to do with Iran. Now, this week we've got some big earnings tomorrow morning. United Health, GE, 3M, DHI, that's DR Horton, and then Halliburton. And we have core retail sales on Tuesday. Some big levels to consider. Friday's high, the current high of the year, was 71.85.75. Friday's close time 71.64 quarter. This week's open 71.0250. We've seen the market try and make back a lot of that ground, but now let me turn it back over to you to get your opinion on what you're seeing in the market right now.
All right, first of all, it's Monday, and I've been telling everybody that after the record run we had last week, that there's always a pullback. And I think the pullback so far has been muted. That's a good word to use. Following the VIX, it hadn't gone crazy. But because of that, and because if you're like I am, you have stocks that you bought, uh, there becomes a time factor that when there's events outside of your analysis, that when you made it, there's a way to hedge it. And today, I told people one easy way to do it, if I own NVIDIA, is go buy some puts below the current price. And I'd go out 30 days. And I would take maybe 95% of the current price of NVIDIA to figure out what strike I want to hedge with out 30 days. That's an example. It's a simple process. But a general way to hedge your account, if you got stocks out there, I've got several in a bunch of different accounts, uh, is to use the SPY and go out 30 to 45 days, and you could go find a SPY, and we calculate here at the class about a 675 put, currently about $5 right now, would hedge roughly about 70,000. Now, because it's about a delta 20, delta 25, you need to have a few more than 1 to 1 to get your 70,000 covered. But the way I would do it is sort of ease into it. You got all day to do it. So if I was going to do 10, maybe I'd do two now, two later, and average in all day if you wanted to have that insurance going into the event that may or may not occur. Now, why do I go 30 days? Because if I go 30 days out, odds are, even if I hedge it that far out, I'll have a chance to get some of my insurance money back once these events pass. So if everybody understands me, give me a yes in the chat room.
Well, we're getting a lot of yeses into the chat room, Tom.
That must have been a
And
pretty good explanation then.
well, we got a better one coming up because today's topic is going to be about exactly what you're talking about. So
Good.
let's go ahead and run through here and remind everybody that tonight, before Tom gets that dessert for Jonathan, we will have the T-Buzz weekly trade letter released. It will be released Monday after the close every week, $9.99 for 1 year access. Make sure to log on to that. Get it at dtitrader.com/weekly. Or if you prefer, call 904-706-3532. You're going to get that broad market update, a little bit of a preview given by Tom this morning. Key news for the week, key earnings to watch, weekly Magic 5 stocks, and of course, special opportunities. And there will always be special opportunities in the market. It's just a matter of finding them. And they do that very well with the T-Buzz weekly trade letter, which will be released tonight after the close. Tom's first book, plus the trilogy, Roadmap to the Markets, Winning the Day Trading Game. The Markets Never Sleep and Trade to Win, all available at Amazon.com. If you'd like to catch a complimentary audio portion of Winning the Day Trading Game, go to dtitrader.com/WDTG. Online public resources, and we're going to be using these a lot as we go through the news. Forex Factory Econo Day, earningswhispers.com, especially important when you're in the height of earnings season, which we're stepping into now. CME Group, NYSE, and Eurex for all your market information. Find out how particular markets trade in terms of the increments they move and what sort of depth they have. More resources over at DTI. We got the white paper booklet, dtitrader.com/WP. Tom's YouTube page, where we've got a nice big crowd joining us there. Welcome to everybody on YouTube. Important terms to know, Tom's penalty tape, Options EDU, and Tom's B&N interview, all linked on this page in the slides. We'll move over to the options education resource. We want to highlight this one here, dtitrader.com/options edu. For those of you who feel a little bit awed by the options market, this site does a pretty good job of simplifying things, making sure that you can understand, especially what we're going to be looking at and how we look at it. So make sure you give that site a little perusal, dtitrader.com/options edu. Now, April FTD stocks, we're going to bring these up, take a look at a few of the things going on in this market right now. And I can see that
Adam, hang
Jonathan.
around. Unless you're in a hurry.
What was that?
Adam's here. I wanted to introduce him to everybody. Let me take a break where you didn't hang around. Folks, this is Adam Mowry. He's the one that he gets our food here on Monday. Tomorrow they'll bring it from upstairs, but he's got it laid out over there, plenty of food to eat, and we want to thank him for doing that, obviously.
It's always great to have Adam come in. Is he going to walk in front of the camera for us and say hello?
Adam, you want to walk over here and let him see you? If you see any trades that you can make money with.
Hello.
Hey, good morning, Adam. How you doing today?
I'm wonderful, Chuck. How are you?
It's great. Great to see you. And I'll be down to see you guys, what is it? The end of next month, right? The end of May, we do the live classes. But before we get there, before we get to the eating of brunch and the trading of the market, let's take a look at this FTD page, which Jonathan has graciously updated. You can see the new update time, 11:14 a.m. Eastern. The VIX Climbing back towards that 20 area,
Some guy said
19.7. Keep a
really
close
good
eye
looking.
there. Let's see. We've got the E-mini S&P, the NASDAQ, the Dow still showing up very strong. Crude still showing up weak, despite the fact that they did climb a little bit. I'm looking at crude right now, 87.17. So a little bit below where they opened at 88.15 today. This is the week start. So we're going to take a look at that as you move forward. If you're following the FTD page in your roadmap software, don't forget Monday typically is your week start day. So we want to pay attention to the high and low established today, not just in crude, but in all markets. Gold, not really giving us much of a signal, coming neutral right now. And we go down through our commodities, and we've got a lot of neutrality in this market. But where we do have things showing up, it's showing up on the long side. Come down through some of our stocks and ETFs. You can see USO, which is, of course, based on crude. That's showing up short. But when we go down to the SPY, all variations of the S&P, the QQQ, the Diamond, XLF, those all going up. XLU coming a bit neutral, and then get down into some of these major stocks. Let me take you down here to Intel, which, if I'm not mistaken, Tom, Intel reports earnings a little bit later on this week. But look at that, 66.16 versus an FTD high of 52.38. Great call on that one. If those of you have been paying attention, Tom has been very bullish on Intel of late, and you can see the results of that bullishness, or at least the reason why it was there, because this stock has really taken off. We'll look at CoreWeave, Apple. Take a look at Apple here. Of course, you still have great strength there. Amazon, Google, Meta, Microsoft, basically your Mag 7. Let's take a look at NVIDIA. Trying to get above that 200 area. Of course, if you were following along on the TNT channel, you know this morning NVIDIA was one of the Magic 5, and 201.11 being the price to watch there. Apple, which has gone past its Magic 5 number, 272.55, up to 273.92. So nice little movement on that. And let's see what else. Amazon was in the Magic 5 this morning at 250. We have not moved up on that one. And the other one, SLV, I think I got to go up a little bit higher. Here's SLV, last traded 72.03. Keep an eye on 72.55 according to the TNT channel. And we'll keep coming down through the list. You see a lot of green. There are a few areas that start to pull back a little bit. Here's RTX. They've been pretty big. I think they report earnings later this week, so watch out for that. Nike, or NKE, that's actually Nuke, not Nike, excuse me. You know, that one kind of pulling back a little bit. And then we've got a few others down here, Palantir, Joby, and then we come back to a stock like J&J, which is actually coming down below the FTD low. BTU also doing that, and then MOS, and a couple of stocks that have been recently added to the list. We got GoDaddy, Airbnb, and some of these I'll have to double check the symbols. I'm sure everybody knows McDonald's sitting there kind of neutral. So a little bit all over the place with the stocks, Tom, but mostly positive in the month of April. And when you look at the S&P in the month of April, it's not a surprise. As we know, as you stress, many stocks do track with the S&P 500. And when you see the S&P 500 having the type of month that it's been having, all that green on the FTD page, not one surprise at all. Now, today's topics. What to do if the market rally fails? And kind of get into this because it might be kind of an interesting development here, Tom. I've got a neat little stat for you. Did you know that in the month of April, every single day in the month of April has closed higher than it opened? Up to this point, every single day is closed higher than it opened. And since I have to double check my numbers here, but since about that first week of April, We have traded to a higher high than the previous day just about every day we've been out. So there's a lot built into this, and it kind of brings up this question. When you see a streak like that forming, what to do if the market rally fails? What to do if that streak stops? What do you do if the market doesn't make that higher high? More importantly, what do you do if it starts making lows? Now, we all know cash is king and the best way to hedge a falling market. So let's see if we can get Tom back on the screen here. It looks like he's getting things ready for the break. But Tom, we get in here, and the current price of the SPY is around 710. So what are you doing with this market? What are you looking for?
Okay, there you go. Okay, we've been with the class this morning, and I said, I think you ought to, if you have a portfolio of stocks, you ought to hedge it. And they said, why? Everything looks great. I said, that's the time you probably ought to be thinking the way I'm thinking. And I said, a good way to do it is buy a SPY put, which is equivalent to about 70,000 in value. And you say, okay, my portfolio is worth, let's say, my portfolio is worth 70,000. So if you bought one put, you'd have it hedged. But that's on the surface. And what I did is a little technique. I went 95% of the current price and projected about 675 puts, which was about a delta of 25. And by doing that, I was able to pay let me see, about $5, 480, something like that for a put. And I told the people in the class, depending on how much money you got in the market, do it over the course of the day. Consider this insurance. That's one way to have a general hedge. Now, specifically, I told people on Friday, if you have a stock, it probably wouldn't hurt to marry the put against it, meaning buy a put. And then what I do there is take about, again, 95% of the current price to drop down to the strike price that would give you a hedge. And I'd go out about 30 days. So why am I so not bearish, but why am I being so cautious? Well, we got another one of those crazy deadlines approaching. The market got closed at the top tick on Friday, and it makes sense to me during this period of time to put this on for the next few days to see where we are Wednesday or Thursday of this week. And so I decided to do that. And I've been telling people that would listen, this is something that you could do to have it working for you. And so it's a pretty simple strategy. And we know that if you have a Delta 50, it'd take two options to equal 100% of your portfolio. But I did a little different. I did a little, I guess what I would call a logical way to buy insurance in an up market where I'm spending a few dollars. The only time I'm going to need it in case the thing did sell off.
And just to set that up, Tom, and understand the deltas that you're looking at, you mentioned 25, 50s on the slides, but from a dollar standpoint, of course, we know that 100 shares of the SPY controls $71,000. When you go into Delta 50, for every 1 point move, or you option would make 50 cents for every 1 point move lower in the SPY. So basically, it's about half the value, Delta 50. 50% essentially, right?
Yeah, so two of them equals one. And
Right.
that's just a general hedge where if you think about it, is it worth having that in your portfolio? Probably not, because if it rallies this afternoon, but if you average into it over the course of the day, so you're going to do 10 of you, do two now, just
Yeah.
do it and have it average. going into the night, because at 10:20 tonight, you can't do this at 10:20 tonight. There's other ways you can hedge your account at night using the futures market, and that's something you could consider. But I'm just giving you food for thought. It's something I'm doing personally, okay? Because I think it makes a lot of sense to me to do that over the course of the day.
So,
And
so the bottom line, when we're using deltas to hedge the market, we just have to understand what the value is. The two Delta 50 options, as you mentioned, will hedge the
right,
portfolio for basically 100%. That's $71,000
this
on
is the
the.
kind of thing it's like insurance on your house. This is the kind of thing you need when you need it, and it costs you money every month when your house doesn't burn down.
Right, right.
Other way of thinking. And
Let's.
think about it this way: if you're wrong and the market stays at the same pace that it's been at, we were 3% last week. 2 weeks down the road, we're doing good. Okay. Tom, I wouldn't do pocket puts here. I would, I would do it. Now, Rob asked a very key question. You can tell he's very in tune to the way I think. At the end of the day, I would take 10% of the hedge or 10% of the strike price and sell a put against that long put I bought to minimize the blow, because I don't think we're going to drop 10%. I didn't even think we'd drop 5%, but 10% down would probably be a way to cut the cost of this insurance.
Right, and to be clear, this we aren't talking about same day expiration. We're talking about going out at least a week or two.
No, we're
You're
talking
you're
about going out 30 days.
at least, yeah. So 30 days. Basically, you're accounting for what the market might do during that time. We don't know what it's going to do. We just want to make sure we're prepared for whatever action occurs. Now, remember, even good stocks fall when the S&P declines. Tom, you've said this I don't know how many times, but a large portion of the market will follow the S&P. So if you're in a stock, the likelihood of it moving with the S&P is pretty distinct, pretty high.
75% likely. And so that's why I think it's good. We got a good earnings season. I told the class this morning that earnings are going to be better than what the street expects them to be. I listened to a guy called Ernie Scout, and the guy really made a lot of sense to me. That's number one. Number two, if you like NVIDIA like I do, there was a great article in Barron's this weekend. I'm going to give it to Jonathan. You can send him an email, or he'll post it somewhere for you to read. If you don't have Barron's, it's a great article. My target on in Intel is 75, but they're talking about 150, and made a lot of mathematical sense how we could get there. So I wanted you to read it anyway. Looks like Intel might be a staple for our portfolio going forward, as long as it keeps doing what it's doing.
And of
Now,
course,
the other
Intel.
thing I picked up, Chuck, and I need to go because I've got a class, but the other thing that I picked up this weekend reading Barron's was the newsletter that's published by the company. And I'm going to let Jonathan cover that portion of this, but I picked 3 stocks, and I'll tell you what I look at when I look at these newsletters. I think they're good if you get time to read the summary of it. But Jonathan, take it away.
Yeah. Okay. So
Yeah, I'm good.
okay. Thanks. So we'll get. I don't think you can hear an echo, but I can hear an echo here from someone's computer. It's still playing sound.
Oh, let me mute both sides of it.
Okay. Thanks.
Yeah, hold on. Now I got my whole computer muted.
All right. Thank you. The important thing here is with the investor relation, the quarterly 10Qs and 10Ks for the annual. It's just so much to look at. You want to find the information you want to find quickly. And Chuck, if you could go to the next slide. For the 3 stocks Tom mentioned, I was able to quickly find a lot of important information. The most important arguably being the forward guidance. There's a little trick you can do on web pages. on Windows keys or keyboards, you can click Control F. CTRL key is the bottom left key on your keyboards, and if you combine that key with the F key, it brings up a search engine at the top right. And if you're on a quarterly statement, or I usually look at the earnings transcript, every company does an earnings call after the report. Most of them issue a transcript version. So you don't have to listen to everything, but you can read the transcript. And that allows you to just search that transcript for any instance where they mention guidance or expected, or if you just want to type in EXPE or EXPECT, expect, you can usually quickly find the information that you're really interested in looking for. That's just a viewpoint of what a typical investor relations page might look like. It usually says investor relations or something along those lines at the top. I even included a link there for the Apple page directly for you. Chuck, if you go to the next slide, this actually showcases, I just did a simple Google search, typed in Apple forward guidance from Q1 earnings release, and I can't remember the website that did a short summary of it, but one of their bullet points actually says company guidance. And you can see that management expects revenue to grow 13 to 16%. That's a healthy year-over-year revenue growth, in my opinion, for an established company like Apple. So that's very good for Apple if they can, meet on those expectations. But let's go to the next slide, Chuck. Here's NVIDIA that looks a little bit different. You can see their page just says investors, but it's all the same information, but different websites will look a little bit differently. There's a link there for it. If you go to the next slide, this came from their actual earnings transcript. So in this snapshot, I did the Control F and search for expected. And you can see there, it brought me to the outlook. This is your forward guidance. And you can have a look through that, but they have very important bullet points on their revenue and everything going forward. This is what you want to look for if you're interested in looking for the fundamentals of the company. All right, kind of sift through all the noise, which you get a lot from the earnings transcript, but these are the bullet points that we care about. Next one's AMD, and if you go to the next slide, Chuck, you can see here I searched for guidance. I found information on it from searching guidance instead of expected from AMD. So just a couple shortcuts I wanted to show you on getting the most important information. Now, if you have the time and want to go through it, you can certainly listen to all the transcript or read through the entire transcript, be my guest. But that's how you quickly find some really important information from those earnings calls. So if you have any questions on that, type it into the chat. But Tom, last night you spoke about Anchor, which is a great program trading TLT, trading bonds. We figured we'd talk about it today as well.
And keeping up with those Telegram channels is,
yeah, folks. Last night, I like diversification, and I like it in the bond market. You can do bond futures, or you can do this Anchor program, which is TLT. And mathematically, I look at things, and this program is very accurate. And then if you add in the master class I did, I think the program itself will give you what are top-notch trades once every 5 days. But my master class allows you to have about 3 of those top-notch trades. And I call it buying wholesale, selling retail. But this starts adding up after a while, and it really gets your attention. And people that are in this program keep sending me love letters, say, Tom, this is a great program, because it's one way to simplify what I call trading bonds or the interest rate market. And the interest rate market's about to get real lively for you as we change Fed chairman. And they're having the hearings this week. I think it's a timely way to come into Anchor. And the price they have is extraordinarily low considering the payoff you get for being a member. So I wanted to bring it to your attention, let you look at it, and I think they're going to play a tape that gives you a lot more details than I just gave you, but it's pretty simple. At 12:30, a little bit later, I can do it up to about 2:30 with my master class. When the numbers hit, I do the trade. I love buying things, what I call on the cheap, and selling them expensive the next day. And you can buy this stuff wholesale, these options, you could do it, and you got a pretty good built-in protection plan late in the day that way to get out tomorrow morning. And so Anchor is something you ought to look at every day. Get your membership, go there, get it, and be part of it. Now, Chuck's going to answer any questions you have, but I think we're going to play it the best we can, right, Jonathan? Is that what we're going to do?
Yeah, Tom, we're going to get that video playing
Okay.
in just a few moments. We'll see. I want to thank Tom and the group down in Ponte Vedra for joining us today, guys. A little bit of a fun time doing it live in front of an audience that's sitting in the room with you. That's always great. So thank you for coming in today. And for everybody out here, will we post the slides? We have posted the slides. Let me go ahead and give you that link one more time.